All right, welcome to another episode of Not Investment Advice. We've got the NIA boys here, Trung Phan, me, Master Flex himself, Jack Butcher, and we've got a special guest today, Nick Maggiulli. Welcome to the show, Nick.
Thanks for having me on, guys.
Nick, in your life, what is the percentage of people pronouncing your last name wrong, and when did you stop caring?
I stopped caring when I was like probably 6. I've heard Maggiulli, like there's no C in my last name. I don't know how that got in there. All sorts of stuff. I try to, correct people where I can and then just not care anymore. So.
Well, you'll have a good laugh because my name that everybody pronounces, like everybody in the show, they just call me Trung. So the Vietnamese pronunciation is Trung. I had no idea until I moved to Vietnam until I was 25.
You've been saying it wrong your whole life.
My entire life. Up until 25, my parents didn't even correct me. I was saying my name the white man's way, like the Americanized way. And then people started calling me Trung in Vietnam. I'm like, hey, sure, whatever, man. Whatever you guys want to call me. But Jack and Bilal here are from England, so they know, like, there's a very popular phrase. Maggiulli is from the Ali G show.
Nick, did you ever watch the Ali G show or watch the movie?
Yes, I've seen the Ali G show. I never saw that joke, but I've seen the Ali G show. Yeah, he's a character.
Yeah, it was there was a whole song. I think didn't he do a song like Shaggy or something? It was like Maggiulli. Yeah. All right, don't get me started on that. All right, so Nick, I've got to do the proper intro for you. So you're the COO of Ritz-Holtz Wealth Management. Sounds very official. You also been writing for the last few years on the blog of dollarsandData.com. You've been really, really consistent there. Every week been posting there. We'll talk a little bit about that. That's mad. And you've got a book that's just come out or coming out called Just Keep Buying. Trung Phan has it.
Yes.
I fingered through it. I read at least 10% of it, which is more than most books.
And so is there anything I missed out on that, Nick?
No, that's great. That's perfect. Yeah. So.
And you're living in New York too, so we'll eventually have to link up in person. But look, man, we're going to talk about the book in a second, but there's only one place to start. In true NIA fashion, Elon Musk is joining the board of Twitter, and he's just bought 9% of Twitter, and we got to kick off with Meme of the Week. Trung, over to you.
Bro, so I use this app called Pixelmatic. I paid $25 for it, and it is the greatest Photoshop app ever. You put a picture, and there's a button called Magic, and just cuts the figure that you want out. So for the listeners here, I put a Twitter's next board meeting, and this is my first official Meme of the Week here, so I'm very proud of that. This one's got 19,000 likes. It's a picture of Wario Elon in a board meeting, and that was yesterday before he actually joined the board today. So the joke's on us, I guess. The joke's not on him.
Crystal ball Trung over here.
Let it be noted that Trung liked his own tweet on that
like
18,800 wasn't enough.
I'm always the first one. I got to get the ball rolling, man. Because the psychological joke where nobody wants to be the first one, but if somebody it's like when you go to a tip jar, right? There's always $1 in the tip jar, and the coffee shop puts it in there. So like psychologically, you're like, oh, somebody else has done it. It's cool if I do it. I don't know if that's like the
Trung,
rule.
you thought this through. This is like the Costco pricing strategies of TV at the front, value pricing.
Let's get right into it with our special guest, Nick. What was your reaction when you saw the ticker that Elon Musk had purchased 9.2% of Twitter? Break it down for us.
I think it's genius. I think it because if you think about this, I actually have a hot take related to that later.
Okay.
Pete, now that he's on, I didn't know he was going to join the board. I was not predicting that. So you guys were a little ahead of the curve there, but I think it's genius because like he's becoming such a cultural force that like he already was that. And he's so prevalent on Twitter that this only adds to that even more. Right. And so people are saying, oh, now that he's on the board, he's going to make more free speech. He's going to bring Donald Trump back. I think there's no chance he brings Trump back because he's now the king of Twitter. Why would he bring back a competitor? Why would he bring back a competitor? There's no incentive for him to bring Trump back. Trump is not coming back on Twitter. He is out. That's my take there. So
I love this hot take. That's a spicy take right off the bat. The running joke we have here is we're going to get demonetized before we get monetized. So that might actually happen. Okay, Jack and Bilal, we need your hot takes before I freaking go on a rant because I got a lot of material here.
I mean, I don't want to jump ahead in case you had this, Trung, but I was just cracking up at the edit button question. He was straight on it, man. I mean, he's already king of Twitter, obviously. So I don't know what is he now because he was already king of Twitter. Now he's 10% owner on the board. He's elevated now.
Well,
He's
the thing a lot of people
unbannable now, probably.
Well, you guys missed the. I mean, some people missed the joke here. When he put the poll, do you want an edit button? He misspelled the word yes and the word no, right? So for our listeners, he spelled yes, Y-S-E, and then no, O-N. I mean, there are layers to that joke, man. That is like an onion of a joke.
Do you think Elon does all of these himself?
Somebody asked me this. So this is my theory on Elon, and I'd love for your guys' opinion. We talked about how powerful this seat is. He's the most powerful person on Twitter, which de facto makes him one of the most powerful people in the world, apart from the fact that he's already the richest dude, right? Twitter as a platform is the go-to communications thing for politicians, media, tech. So like the engines of the world, right? Donald Trump between 2016 and 2020 was the most powerful voice in the world because of Twitter. So you think Donald Trump was giving that up to anybody? You think like one of his press secretaries was touching his phone? There's no chance. So that's my opinion on Elon. Is like Elon knows it's the most powerful interface in the world on a smartphone. Why would he let an intern run that account? That was my opinion. Mm-hmm. And then on top of that, some of the crazy stuff that's been tweeted out there, there's no chance an intern's like, hey, I have an idea for a tweet. Like, let me run it up to Elon. Only Elon is coming up with that shit. That's my opinion on if he has a Twitter team. On to you, Nick. Thoughts?
I agree. I think he probably does it himself, just like I think Trump does his own stuff as well. Like, I think you have to kind of, that's like how he thinks. I mean, like a lot of the stuff he does, like even though like he, you find like, oh, he puts some meme out that you've seen like 3 years ago or something. It's like, why would no one would do that, but he does that and then it goes viral again. It's so funny. But yeah, I don't think he has a team at all doing it.
Yeah, so. He was, I mean, that to your point though, there's definitely, I believe there's people feeding him content. But then he's just like, it's like the group chat thing, right? Like we all have group chats where it's just that he's the richest person in the world and has 80 million Twitter followers.
Yeah, exactly.
All right, so I could do this. I don't want to obviously spend too much time on this. Well, that's a lie. I do, but we have a special guest, so I can't do that. So,
well, I mean, what do you guys think about that? I want to ask about the edit button. Like, what do you guys actually think? I think edit button's a terrible idea. I think it's an absolutely terrible idea.
Tell us why.
Because you can't. I mean, you can't send a tweet out and then it goes viral. Then you change all the content. Now people like something they didn't agree with. There's no way an edit button's going to work. Plus, I'm not even talking about the data infrastructure side of having to make edits and stuff. I think it's a disaster from a business perspective. It would just be annoying for like all the engineers to do that. And then from like a moral perspective, like imagine I put something out there, a lot of people like it, and then I change it later. That's just not okay, So I think the delay tweet makes sense. Yeah.
I think they're going to have like a history of what was written, though, no? Because
that's what Facebook does, and LinkedIn. They both have histories.
Yeah, and you click in and you can see, oh, there was a spelling mistake or they changed something.
But let's be honest, no one's clicking that edited history.
Yeah, that's like terms and conditions.
It's like the first reply, like the main tweet could be wrong, and the first reply is like, oh, by the way, that was a joke. Like, how many people see that? Maybe that's a question, right? Like, there's always that. Like how many people see that? Look at the impressions on your first reply compared to the original tweet, and it's always like not even a tenth, if that, the impression count.
Oh, so. Anytime there's a incorrect tweet and then somebody puts a correction, you're right. It's not even a tenth. It's like 1% of the engagement, right? It's like the fix is like seen by no one. So I'll say this. I agree with Nick. And my first instinct actually was like, oh, I want to edit, but just because how many times I've messed up Twitter. But the former chief security officer at Facebook, Alex Stamos, who writes extensively on security now, he wrote today, he's like, edit buttons are terrible for exactly what Nick said. He's like, the amount of information that on a super viral tweet that can just be changed afterwards is like, it's a huge problem. It's even a huge problem on Facebook, right? For a lot of these scams that go on too. The super viral things started one way. Like I could write something that like this, the meme that we did, meme of the week, and that should turn into like a pump and dump shortly after. But the last thing I'll add on that was, I think the infrastructure reason was the main reason Twitter didn't actually want to deal with it. Because I have no idea about the back end. I mean, Nick, you are a computer guy. Bilal, you worked at Google. It sounds like a nightmare to fix the edit stuff.
Yeah, I don't know much about it, but I just know theoretically it would be difficult, right? Imagine like, okay, I send you one text, we have to make a change. That's just one change we have to make, right? And then I have to do it times the number of characters, right? Number of changes we have to make. Now, what if 15,000 people saw that? And then how many people put it in their feeds and then in their likes? And then you have to, number of databases you have to update is like massive, right? To make sure it's right. Or some people seeing the old tweets, some are seeing the new. Now imagine the version control of that. That would just be crazy in itself, but yeah.
I like that. Well, here's one that he's written about. My last reference from him on fixing it. He in January was really annoyed when people were allowed to put their NFTs as Twitter profiles, He wrote, "This is annoying." He hates this feature. Butcher, what do you think about this? Jack, the NFT as a profile picture. Is he going to get
I've already
rid of it?
said, I think it's dumb. Stupid. But the edit button thing, I think he just like, it's just the meme, just ride that meme to accomplish other goals, right? He knows it hits a nerve. And that I think is like very indicative of how he uses Twitter. It's like find the pressure point and exploit it. And then whatever he's actually planning on doing could be completely in a different direction. I agree. I don't think edit buttons is going to happen, or should it? It just, there's a delete button. If you get it wrong, do it again.
100%.
Didn't they already post they're going to do it though?
No, it was April Fool's.
Oh,
they posted on the 1st of April, yeah.
Wow, man. First rule.
Talk about misinformation, man. Jesus Christ. Oh my God.
It's one of the things that makes Twitter great, I think, as well. It's like the stream of consciousness sort of vibe of it all is like you fire it off, you move on, you do another one. It's not like you're logging into the back end of WordPress and adjusting every and if you're worried about getting it wrong, just spend an extra 10 seconds. Like what are we actually
get
catering
Twitter Blue?
For here?
Get Twitter Blue and put that little 30-second delay and read your tweet. I mean, if you're really that worried about it, like read your tweets, like they'll make you read them. So
I'm paying $2.99 out of charity, man, because I owe Twitter a lot, as I think we'll find out too. I think, Nick, you have a similar sentiment. Well, I know a lot of your stuff comes from blogging, but Twitter definitely is a career enhancer.
Yeah, for career stuff, definitely, yeah.
It's like
can you imagine all the epic tweets that we would never have got if there was an edit button? Like all the Kanye tweets, pretty much 98.
That's fair.
95% of Trump's tweets, like the comedy gold in these. Oh my God. Yeah, exactly.
Well,
it's like bowling with the sides up.
Yeah. With the bumper rails.
Baby lanes, yeah.
Well, I'll do this. So I will let us move on eventually, but let me run out my 3 theories and you guys tell me. So there's the first one is a free speech thing for why Elon is invested 9.2%. So he's been throwing out polls over the last couple of weeks talking about is open source Twitter's algo, is free speech a problem on Twitter? Of course, there are moderation issues. So some people think that is one reason. The other reason, this comes from the Margins newsletter, really good newsletter. Ranjan Roy wrote it this morning. He believes that the SEC was about to drop the hammer on Musk over his November poll where he said, should I sell my 10% of Tesla to pay for taxes? Because Kimball Musk, brother and board member, sold 100 million worth of shares before that poll came out. And people think there's some insider trading going on. Apparently, the SEC has been turning up the heat. And according to Margins, that could have led to some type of action where Elon was just finally just like, we got to get this guy off Twitter. So he's like, you know what? I'm going to 40 chest this move and I'm going to buy 9.2%. And then my pet theory, which I've talked about on this podcast, and you guys get to decide which is true, is that Elon believes that he lives in a simulation. He said this a number of times, and he's just the best player in the simulation. So those 3 theories, I'll put it to the floor. What do you guys think of those 3 theories? Which is most likely?
I'm going to take
over you, Jack.
No, answer Trung's question because I'm not going to answer the question. So I'm going off on a tangent.
I think the second theory makes the most sense, which is like he was like, oh, they're going to kick him off of Twitter. Is like, if I buy, like they can't kick him, I'm a board member now. Like I think that seems most likely. The simulation thing, whatever, that could happen. And then the first theory about the whole like insider trading. I don't know if that's. I mean, I don't know. So I think that the most likely thing is like he's like maybe they'll try and kick me off Twitter. So like this cements my position on here to keep like literally this most valuable asset he has, which is his PR.
Absolutely.
So.
I like that. Of course I do. I like everything that is pro floated. Jack.
So my theory is more about the like securing the rails of consciousness, or like the fountain of memes, like where the general consensus on what the world thinks is generated. You could argue Twitter's up there at the top of the stream. And I think with Neuralink and all of those things, like, yeah, there's the meme argument. But you also have to acknowledge the fact that this guy is building things with a view to improving the human condition over time. And I think like a lot of people think of social media as this like throwaway thing or this toy or something that isn't that consequential. And we've learned especially in the last 5-10 years or so, that it like really shapes the way people see the world, the way people interact with each other. And I think, I'm hopeful that a lot of the desire to be in a position to like direct a force like that comes from the desire to try and prevent or at least stem some of the negative side effects that we've been seeing over the last 5, 10, however many years, because it is like a alien life force, right? I think someone working on like how people think probably has a lot of opinions on how to improve something like that, but remains to be seen. I think all of the like practical, tactical things also make sense, but those I think are downstream from the fact that deciding to use Twitter as a mouthpiece in the first place, I think comes from this like he who controls the memes controls the universe, right? He tweeted that.
Well, he's also said, right? He cares about human consciousness, exactly like you said, Jack. He's like, I care. That's why Mars matters to him. He's like, we need a second planet so we continue the likelihood of human consciousness. And like, oh, this is the video I'll put, the last one I'll do for the Musk, but like I've shown this video we put forward, but he said that when he found out about the internet, he thought that it was the nervous system for the human brain, for the world. Let me know if you guys can hear this.
Nope.
Oh, yeah, I can hear it. All right. Well, he just says the internet, when he found out about it in the 90s, was something that would create a nervous system for humanity. So that's how he thinks about it.
Yeah, I think we talked about this way back, where it's like he's building this network. It's like energy, internet with Starlink, infrastructure with Tesla, and then Neuralink, obviously. And Twitter's like a L2 thing that plugs into all of this other stuff, right?
I have to say, cool. Jack, you calling it fountain of memes is my favorite phrase in a long time. That's brilliant.
All right.
Yeah, nothing else to add. I think I'm just curious, what do you guys think Jack Dorsey is feeling like right now? How do you feel like? Because I saw him post like congratulations to Elon and the CEO. What's it? Is it the Indian dude? Parag, yeah. And obviously he kind of has to write that. But I'm curious, what do you guys think he's actually feeling right now?
Well, I'm going to tell you what Jack Dorsey said about Elon Musk in 2019 for Rolling Stone. Rolling Stone asked him, critics paint Elon Musk as ridiculous. This is Jack Dorsey's answer. He is ridiculous. You have to be thinking that big. I love him. I love what he's trying to do. And I want to help in whatever way I can. So whether or not he's with Twitter, I think they are aligned. I think there's some bromance going on between Jack and Elon, man. Yeah. I think they're fully aligned here. And I think Elon's actually going to help smuggle in a lot of Jack's ideas that like Jack had just ran his course, right? Because Jack wants to create these decentralized social network protocols. Blue Sky is the name of the initiative that Parag Agrawal actually used to run. So we'll see what happens, but I think he's very supportive of it.
Nice. Yeah, nothing else. I think the only thing I'd say is, did you know how much of Jack Dorsey's wealth is in Twitter? Still, it's not that much now, right? I think it's like 80-90% is Square. Yeah,
89% is Block and Square. And then his unconfirmed amount of Bitcoin, and he's only ever said, when was asked, he said, I have enough.
All right, so it's not necessarily going to impact him financially, though. By this point, it doesn't really matter. It's more legacy and, like, he's a fan of Twitter. So but I'm curious to think, like, if, let's say, Elon and these guys, like, reinvent Twitter and it's a huge success, like, it's something that he couldn't do, really. I mean, like, Twitter obviously started it and it's success because of him. But for years, it was kind of stagnant.
Guys, hold on. I hate to cut you off, Bilal, but live, this only happens on NIA. Jack Dorsey just replied to the exact tweet I put out. And he says that he just said, what I said is still true about his boy Elon. He still loves Elon.
Strong is so high. Still true.
Wow.
All right, we're getting an inside
scoop. He got in under 1,000. Wow, under 1,000 likes. That's early. You get it on a Jack Dorsey tweet under 1,000.
Early, man.
Yo, I'm done. Yo, good. Man, Nick, man, great chat, bro. Tell these guys.
Wow, I love it. You gave the opinion and then just broke live. Wow.
That's incredible scenes.
Oh my God.
He's so hype.
Is that your
so good at
first
this.
Dorsey reply, Trung?
Oh, I got a couple, bro. I got a couple Dorsey replies.
Trung's bringing out the screen share of the presentation. He just happens to have it ready right now. Add it to it. All right, Trung, anything else on that before we move on to Nick's book and what he's been working on?
Let's give the floor to Nick, man. I'm done, bro. I am completely shot right now.
Absolutely crushed. Flawless victory, as they say in the Mortal Kombat scene. So,
all right, Trung, should we move on to Nick's book, or is there anything else, boys?
Absolutely.
You any more thoughts on Twitter before we close that out?
No, I don't think you can top what just happened. But let's
I
move
think we could. Editor, let's just cut straight ahead to the next part.
That was
right
great.
now.
Editor, cut ahead.
Let's do
Editor,
that.
cut the last 2 minutes. All right, guys, sorry about that. All right, so I'm holding here Nick Maggiulli's book, Just Keep Buying. First of all, a couple of things I want to point about this book. So for the listeners, I'll announce the visuals here. You need to see who is shouting out Nick on the back of this book. Look at this. Oh, it's too bright. He's got Morgan Housel, who wrote The Psychology of Money, which I believe is one of the 2 best-selling books in the past decade. And the other guy that has the best-selling book in the past decade, James Clear, has a comment on the front. James Clear writes the ideal combination of thoughtful and actionable. That's like me on Twitter. So like me and Nick are similar in that sense. So Nick, can we just start with why did you write this book and how it came about from your background as a blogger? Because I know this is a big part of it.
Yeah, so I've been writing for 4 years at the time, and I knew that I kind of wanted to organize kind of my investment thoughts into philosophy. So a lot of writing a book is, I think it's just structure, right? It's like I had a lot of the content. So half of the content in the book came from old blog posts that I repurposed, and my editor went over and kind of crafted into a nice narrative. The hard part was figuring out the structure. And actually one of my other blog posts actually became, the first chapter is basically what lays out the structure. There's 2 parts, saving, investing, and kind of talks about that. But I really wrote it because of COVID. Like March 2020 happened. I was in New York City. I saw that first wave, and then we flattened the curve temporarily. I didn't realize, I was like, oh guys, it's over, right? No, it was not, right? Then May, Memorial Day came along, second wave. I'm like, oh gosh, and then that one flattened. I'm like, okay, now it's over. Everyone else had to get it. That's why I was stupid. I was like, okay, I made my first error. Now it's over, right? And then December 2020, which is the biggest wave we had up to that point in time. And I was like, then I got super pessimistic. I was like, we're going to be in this thing forever. So I was like, I need to use this time. I'm like, I've been writing enough. I was like, I have every weekend off for the next 5 months. And I basically took 5.5 months every single weekend and just wrote. And I basically wrote it up, and then obviously I had to go through the editing process, but that was it. So that's kind of how it came about. It came about because of COVID, but also because I was like, I think I have enough material now where I can organize it into something compelling.
How much of this book is original versus readapting a lot of your older work?
I would say it's 50-50 at this point.
Okay.
So, because the readaptation, like I even talk to people who read a lot of my work and they're like, yeah, I think like 20 to 30% I'd seen before. And these are people like read a lot of my work. So if you don't even, like most people have read 1 or 2, maybe 3 of my posts at most, like let alone, the number of things I put in there. So I think for most people, it's going to be like 95% new, maybe you'll recognize one thing in there if you like are a decent fan. So
I was a fan before I even knew I was a fan. Like I've seen your articles float around all these years, and so you've written on your blog of Dollars and Data that a lot of the writing, completely changed your life, right? Like, Can you explain how much it changed your life, like what you were doing professionally, and how you ended up to where you are now, and how much writing was involved in that?
Yes, I wrote once a week and I've been doing it for 288 weeks. Have never missed a week. Or if I do, I'll post a second post in a week and I won't post the week after. For example, one time I had an uncle die. And so I kind of wrote a post for him earlier in the week and then I didn't post something the next week, but basically 288 weeks in a row and completely changed my life. I almost look at it as like a form of public therapy, really. Like I'm not just in like, oh yes, I'm writing about money and investing. That's great. And like, I like talking about that stuff. But at the same time, like I've written about my struggles with alcohol. I've written about regrets. I've written about imposter syndrome, all sorts of stuff that like just happened in my life. And I'll sprinkle those in now and then. And I kind of look at it as like public therapy. And I think it really can help people a lot. And so just for me, it's almost like a public diary. And it just happens that some people tend to like it. So it's just been really helpful for my career. And yes, I used to be in consulting. Now I'm in, finance and stuff, but at the end of the day, I think it's more just for like me, just because I like doing it. Like that's the end of the day. I enjoy doing it because that's it. So
is your job at Ritz Hold directly responsible from the blog though?
they found me through that, but I'm really, so the role I have at Ritholtz is actually an operations role. I'm not like the guy picking the stock, picking like our investment funds or anything like that. I help with like the operations and data science part of it. So that's really from like my prior role, but they found me because of my blogging, which is kind of a data heavy, investment side. So I think it's mostly like I'm doing the work related to my old role, my old job, but at the same time, like, I'm just writing because I love it.
So you
Nick,
go ahead.
Can I just ask one real quick? Did you write much before you started that blog? Did you write like when you were younger, even at college? I'm just curious because a lot of people, I mean, you're a really good writer, and it seems like you've obviously, probably improved so much writing every single week. But just curious, like did you have any background in writing, even just for yourself or anything like that?
No, I don't. I actually used to hate writing, to believe it or not, because I was always writing about what everyone else wanted me to write about. And that's kind of what I think is wrong with the education system, right? With writers, at least, it's like, hey, write me a 500 word or 1,000 word essay on this random book you've never heard of and you have to read. Like, it absolutely takes the joy out of writing. I'd rather say, why don't you write me any length paper or whatever, write me any length of anything and just impress me. That I think is a better assignment, because then someone can tell a story about something that happened to them and they can put details in there that can try and, get you. And of course you get better over time. Like, go read my, second or third blog post. It's terrible. Actually, don't read it. Actually, don't do that. So like, I'm just saying you get better. You do. Like, you go read my second blog post. They're all in the archive. Go see them. You're like, this actually isn't that good. Like, I'm not like, you can read it, but it's legible, but it's not good. Right. And so over time you just get better and better. You read a lot, you learn from others. I've obviously taken a lot from, Jason Zweig, Morgan Housel, just from learning about how they write and kind of understanding them, that it helps me a lot as well. So.
Yeah, that's a great point about like for kids, like if you just told every kid, write like about a topic you're interested in, whether that's like football or like your video games or whatever, like we don't need 50 essays on To Kill a Mockingbird, like, you know what I mean? Yeah. Like we've been doing that forever. But yeah, sorry, Tron, you were going to say something.
You need to put some respect on To Kill a Mockingbird.
Legendary. I only appreciate it as an adult, but when I was 12, not the book for me, but yeah. Trung, you were about to say something.
I want to say this. I want to ask Jack. I'm like, Jack, first of all, Nick, are you familiar with Jack's visualized value work?
Of course. I've seen it a lot.
How much? One of those, one of Jack's most famous pictures is like, there's a bar, like kind of bar charts going up and up and up, but some guy quits and just says, this is pointless at this point. Yeah. But if you just kept going, it's like, man, that's like Nick, right? Nick is like the perfect example of this.
Yeah, because I've actually grown very slowly. Like I've been doing this for 5 years. I barely have 20,000 email subs. Like there's a lot of people out there like that have blown up in the last year, have 50,000, 100,000. Yeah. I've been grinding this a lot longer than most people. And like, because I wasn't as good, honestly, that's the truth. Like I've had to grind at and just get better and better. And so it's one of those things where it is a longer compounding game for me. And it's not like about like, oh, I'm trying to, and I don't do growth hacks and all that type of stuff. I just like put my posts out there. And I'm not a great marketer. I'm just like, I write and that's it. And if it's good, people share it. That's kind of my thinking on it, right? So
what was your first viral piece?
It's ironically, actually, my first piece that did really, really well. I wrote it 5 years ago, and it was called "Just Keep Buying," and it was actually what became the intro eventually to. It's funny. So my book was actually supposed to come out February, I think 8th, but because of the supply chain crisis, they had to push it 2 months, and I was like a little upset by that. I didn't even think about it at the time. They said, "Oh, we're going to come out April 12th." I said, "Okay, cool." And I didn't even think about it. I look back in my archives, and 5 years to the day after I published, when the book's being published is when I published that first blog post, Just Keep Buying. And it just shows
that's
like
incredible,
that became
man. That's
literally the intro to the book. I mean, there's obviously I changed it a little bit and stuff. I can't put a GIF in the books, obviously. So I had to make some changes. But besides that, that became the intro. And so that core philosophy, I've been saying the same thing for 5 years. I'm telling people not to buy the dip, and people laughing at me, this and that. And, and the data shows there's a lot of people like, oh, I'm not going to remember 2017. Everyone's like, oh, the markets are too high. I'm going to wait till then there's a dip. I'm like, okay, let's say you did that. You waited 3 years until March 2020. Now you got your dip. You wait till the perfect day, March 23rd, 2020, the exact bottom. You perfectly call it. You save all your cash. You buy the dip then. Guess what? Even if you had bought on that bottom, you still would have bought at prices 7% higher than if you had just bought way back in 2017. So, and obviously that's a very extreme example. No one's going to perfectly time the bottom or do any of that. But even if you did, a lot of times you end up buying higher than where you could have bought originally. So
I love how Nick did that. It's like, let's say you did that. Wait, so Nick, you actually asked us just to ask this. So this question actually isn't directly in this book, or maybe I'm saying incorrect. So let's just ask it. You touched on it, but tell us why you should not, just break it down fully. why you should buy the dip and what the real philosophy for just keep buying is. It's like this dollar cost average philosophy, right? So what is that?
You just buy every month, keep buying over time, and just don't worry about market timing. And it is explained a little bit in the book in like chapter 13 and 14. It's kind of discussing chapter 14 mostly, but the main premise is like every time you're saving up cash to buy the dip, like you're assuming that there's going to be a dip that's below the current price, right? And the real problem is usually the market keeps going up and then the dip happens, but then like that dip is higher than where you could have bought originally. And that's true like in 80% of cases over a lot of rolling periods, et cetera. Like I show the data in the book, but that's the main premise. That's the main reason why you shouldn't do it. And so there's all these people like, oh, I can't wait to do it. And I've written other blog posts on this, why it's a bad idea. And for most of the time, it doesn't work. And let's say you get it right. Let's say you actually get it right once. You're like, wow, look, Nick's an idiot. I got it right. Okay. You got it right now, but it's going to burn you later because later you're going to be waiting for a dip that doesn't happen. You're going to be sitting in cash while I'm not sitting in cash. And that's where I'm going to beat you. You're going to win in the short run, but I'm going to win in the long run. Tortoise versus the hare out here, man. We don't play.
Let's go.
Play with this. Yo, I have not seen this side of Nick. He's coming after people. I did not see this yet. But so Nick, is this similar then? I didn't see it mentioned in my 10% of reading your book. So apologies if it's in the other 90% and I missed it. Do you touch on the fact that again, what is it like 50% of market gains are on like 5% of the days? Is that one of the stats that is true, or is that total urban legend that I'm perpetuating?
No, that's I don't know the exact numbers there, but yes, a very small percentage of days account for most of the gains. But that's not I don't really, because then you're trying to get into timing on specific days in and out and day trading and stuff, and I don't recommend any of that. But I don't think that's the issue really. It's just if you're owning it over time, you're going to get the market gains if they're there, right? So that's if you're an investor, right? What's the point of investing in something because you think it's going to go up? So but the premise already is like the buy the dip is already against the premise of investing in itself. Like, why are you even buying the thing in the first place? So it doesn't make sense to me. And so I'm kind of I get a little heated about it because it just seems so obvious to me now, like, especially after looking at the data, like the behavioral part in the data, it's like, it's crazy. So
there's some people heated in the comments right now, man. I mean, this is NIA. So, but no, go on. That makes a lot of sense, Nick. So on that though, there's a lot of people that say a lot of this theory is based on, like historical returns, and I guess you would say, well, it's hundreds of years of data by this point, or 100 plus, or whatever. What would you say to those people that say we're at the end of an 80-year cycle or something like that, right? Like, I don't know enough about this stuff, but like Ray Dalio's new book talks about these kind of like 80-year cycles, and like the fourth turning is another one that I've heard people talk a lot about. And if that was the case, that maybe we were changing the financial system completely, which a lot of people might believe listening to this. So if that was the case, would buying forever, for the next 30 years, buying, let's say, low cost index funds or whatever it might be, still be relevant and work in a scenario where things were more drastic?
Well, I mean, I don't know much about 80-year cycles, but I mean, how many data points do you have for that theory? 2? I mean, are you going to run your entire analysis off 2 data points, right? I'm like, I don't even like, oh yeah, we have 1 and then we have 2. And so look, we have 1, like, it's like, come on, like 2. And come on, even like, now I'm not going to even get into that. Like, I just sample size you, bro. Like, don't even like, we're not going to even get there. So like, let's kind of toss that one. Like, let's not even, no offense to that. Like, I'm just like, okay, what? Like,
so
we're in a new paradigm.
He's ready.
Like, there's a new paradigm where like 80 years. I don't even understand that. Like, it offends me to even think about that because I can't even conceptualize it. Like 80 years ago, what was happening? 80. I have to think, back to what, 1960? Like, what's going on? No, before that even. What am I talking? Can we do math? 1940 or something. It's like 80 years. Like, that is just wild. Like, what was happening then?
Okay, so I guess to add more context, meaning the counterpoints, I'm not saying I believe this, I'm just trying to give counterpoints to, I buy every month the same boring stuff, right? Apart from a few crazy things that I do for fun. I guess the other data point a lot of people look to is the devaluation of the dollar, right? So if we're looking at returns for the stock market, let's say over a long period of time, denominated in dollars, of course, everything is up and to the right. But in the last few years, we've had a huge increase in dollars printed and that sort of stuff. So I don't know if that's like even relevant here, but I'm curious if that's something you've come across and you've thought a lot about.
Well, I mean, we try to inflation adjust for all this stuff. Obviously, like in the most recent data, it's hard. Or what is inflation really? I mean, there's debates made about this, but like people saying like the inflation rate is like 15, 16%. That's the real inflation rate. It makes no sense. You actually run the math on that. Like like it just wouldn't like it's just not possible. Like our GDP would have to be so small in the past. Like if you just run, it's just not possible. I just don't know how to explain it. Like I'm not an economist, so I can't perfectly explain it to you, but I've people a lot smarter than me have explained, like you can't have a 16% inflation rate since 2000. Like everything would everything would not exist basically.
I think Bilal's dancing a bit here. Let me sorry to cut you off there, Nick, but I'm going to jump right into it. Bilal's asking you, what are your thoughts on Bitcoin? Because that's the real question. No, I'm actually being serious.
Nice transition there.
No, Bilal, because you're talking about Bilal, the point you're bringing up about like how much asset inflation is to this range that we're talking about, right?
Exactly, asset inflation. That's the phrase I was thinking of.
Argument is like if you're talking about goods and food and energy, 16, 20%, whatever. That is a little bit unrealistic. But if you're talking about pure asset inflation, right? I think this is the Michael Saylor argument. So I'm going to butcher his argument, but his whole argument is that the printing of money has created this massive asset inflation. And when you look at the basket, what people actually want, you have to start thinking about assets, right? Because of deflation in technology and food and goods and your standard of living, a lot of costs have gone down. So where are you actually thinking about, and what really matters to a lot of people is what assets can I get into? So that's two-part question is, well, it's just one part. Man, what are your thoughts about Bitcoin and his argument around asset inflation and why Bitcoin is such a superior, or as he calls it, the apex predator of the financial universe?
Trung's watched a few 12-hour sessions here. So
I'll get into Bitcoin in a second. I think like I'm very like, I'm not a big holder. I say don't hold cash, right? Whole buying the dip thing is about holding cash. Like I'm against cash, right? Generally, like obviously for emergencies, that's one thing. Like for your own personal life, you need that for emergencies. Outside of that, don't hold cash. It does go to basically zero, and it does trend to zero. So you're saying, oh, there's all this asset inflation. Yeah. If you'd been following Just Keep Buying, you would have benefited from that asset inflation. Like, what do you, like everyone's like, oh, the Fed's manipulating markets. I'm like, so what? So, and then you're not buying? Like, you should be buying it. They're going to keep manipulating markets. Like, you should just stay. It's the big joke. I mean, the Joe Weisenthal joke is like, oh, so you're buying, right? You know, that little meme with Padman, you know, it's like, so you're buying assets, right? You're buying stock. And they're like, no, we're not. We're going to bonds. It's like, what? It's like, oh, the Fed's manipulating everything. Yet you're not, you're like, you should take part of the manipulation, own the stocks, right? Own the underlying, right? But in terms of Bitcoin, I have nothing against Bitcoin. I own some Bitcoin, about half of Bitcoin. I've owned it for a while. My rules are very simple. I keep about a 2 to 3% allocation in, I think, Bitcoin and crypto and Ethereum. I hold that. And when the price goes up, I rebalance out. And when the price goes down enough, I will rebalance in. And so I don't follow it too religiously, but I'll just like follow it over time. Like at one point it was 2%. It got up to like 8% of my portfolio. So I had to sell some off. It triggered some people. That happens. And the price has come down just a little bit since. It's basically at where I sold it. And, you know, that's it. I mean, I don't have a big, long thing. It's not income producing. So of course this could be the thing that takes over the world, and maybe Saylor's right. I don't know, but I think everyone should hold just a little, you know, so for your risk tolerance, I have a little just in case. Right. And so that's I hedge that stuff. So I'm not anti-Bitcoin at all. I actually like it as a private asset, like a private wallet idea. I love that idea actually separately. So I love having this. I have this portable bank I can take with me. All I need is 24 words and I can go anywhere in the world and I have my money. That's a great idea. I'd love it for that. So
somebody on this chat right here has a slightly different risk appetite than you, Nick.
No, I didn't understand that.
Yeah. Jack looks guilty.
No, definitely. Yeah, but I subscribe to Nick's philosophy in a different proportion. And I think just as you're talking about it, the idea that like innovation gets incorporated into the vehicles that you're buying into, like that's really the only point that I ever needed to be convinced of. It's like there are all these geniuses in the world that are building things that are eventually going to turn into public companies. Do you want to own a piece of that or not? Mm-hmm. Yes. The answer is yes. And I think one of the things that I spend more of my time thinking about is like investing as like wealth preservation and long-term planning versus like income production. And that's like these books and these ideas are for people at different stages of life and apply in different levels of severity. And the weighting of my portfolio was manipulated purely by the way I made money, not the way I chose to allocate money. Does that make sense?
Yeah, that makes sense.
Paid in crypto
you're being
assets.
paid in ETH, right? Yeah.
Right. So that really manipulated what I held. And so, you know, some of that we rebalanced out. And I think this argument for 99% of people is the exact right thing you should be doing. And the idea of chasing assets as like a form of income is the data has proven over and over and over again how many day traders are. I mean, on every single transaction, there's a loser. What is the likelihood that you have more information than, the 90% of people who've been doing this for a living or do it for a living or have 1,000 times the resources you do? The chances are pretty low that you're going to beat those guys. So I think it's I think this book, I think Psychology of Money completely changed my perception around, getting too distracted by the things that, investing as wealth preservation and wealth building over a long time frame is I think can't really even be compared to some of the schools of thought that are trying to attack it, right? Which is you have to become a top 1% trader in a market where you have no edge. Mm-hmm. It's a crazy thing to pursue and spend your time on. And the other half of this conversation where we've talked about building a skill and consistently putting stuff out into the world and using the internet as a platform to build opportunity for yourself, then, filter some of that income into vehicles that are a little less risky, perhaps, I'm all on board with that. Despite if you saw, on paper, what I'm currently representing in the financial world. But Nick, I got to say, I took some risk off earlier in the year.
Good, great.
Clicks to bricks.
I talked about that.
Bricks.
I think it's chapter 18. When should you sell? It's called Just Keep Buying, with our moments to sell. And I say de-risk, you want to get into, maybe you're getting into, let's say, physical real estate, or you're going to put some of your money in stocks or something. That's completely fine. So I think everyone does it differently. And I don't think there's a right way to get rich. And so I happen to do this, and I use equity index because it's simple and easy for me. I mean, Jack, given your professions, you sell NFTs, you're getting paid in Ethereum. It's going to be very different for you, and you're going to have to trade out of that, right? It's just I get paid in cash, and most of us get paid in USD, right? So if you're getting paid mostly in USD, I'm getting out of that as quickly as I can and getting that into a different asset, right? So in your case, you're using ETH to maybe buy a different asset or just hold the ETH or whatever you do with it, or stake it. Who knows what you do, right? So there's a lot of things you can do with it. So I think that's the key, is you're not just sitting in fiat, in your fiat, whatever your fiat is, forever. So
I think you might have to rewrite that chapter. You want exposure
to the genius of other people. I think that's a really, that's the helpful frame for me when I first even understood the concept of a market. It's am I going to do a better job at accelerating value creation than Elon Musk or Jeff Bezos or whoever else? Yeah, I like to bet on myself, but let's be honest here, right? There's people that are a few steps ahead of you, and you could get some exposure to the things they're building. And it just is, I mean, it's I don't know. It's hard to really imagine outside of pure Armageddon why you wouldn't incorporate this strategy in some way. And if it's pure Armageddon, then everybody's strategy goes to shit.
Then we've got bigger problems to worry about. Jack, I was just going to add one thing to what you said that kind of landed with me as well, which is at different stages, investing is something everyone should learn about if they can and should focus on, but especially early in your career when you don't have a large portfolio. If you've got $2,000 in savings, your 7% return is only going to be a slight increase of that each year, right? So at that stage of your career, in my opinion, you need to really focus on learning skills that you can increase from 2,000 to 10 to 100 to whatever. And that time spent is way more, valuable spent on up leveling and basically increasing that stack, if that's your objective anyway. But then it does get to...
That's chapter... Oh, sorry. Oh, okay.
No, go for it, Nick.
Okay. That's chapter 1 of the book, Savings for the Poor and Investing for the Rich. I make that exact point. I said when I was 23, I was obsessed over my investment returns. I had $1,000 to my name, right? So if I got a 10% return, that's $100. I was going out with my friends in San Francisco, dinner, drinks, shots, Uber. The $100 is gone, right? So you're exactly right. You have $2,000 game. Who gives a crap what you're buying? Unless you got lucky and bought some NFT that went up 10,000%, it doesn't really matter. And those days might be long gone. So yeah, I agree with you completely, Paul.
Completely. Yeah, but no, that was it. And I just, even thinking from a mathematical point of view, a return on investment, like the time you're spending working in a job or doing freelance work or doing something on the side, like if you literally put that in a percentage terms, it's way more than 7% a lot of the time. It's 50%, 100%. And I think that took me a little bit of time, but then there does get to a point, and I'm curious to get your take, Nick, because you've studied this and you've gone through it with yourself and your job is related to this, is at what stage does basically looking after your, putting more diligence and time into your portfolio, let's say, become more worthwhile? And for example, I was speaking to a friend last week, and I can't say the amount or whatever, but he's got to a certain size where he's saying the amount of money that his portfolio is going up and down in a day is sometimes more than, his month's salary, or even way more than that, right? And so I'm curious, like, is there a point where it becomes more important, or is it just keep buying, don't worry about it, take the psychology out of it all, from your point of view anyway?
No, I addressed it. This is chapter 1. This is actually that idea is the core idea behind like kind of the structure of the entire book. And so I say savings for the poor, investments for the rich, but I can tell you how to do it. We can just do it right now. Every one of us has 2 numbers, and I just need 2 numbers from you. You don't have to give me your number. Just think about it in your head, right? First number is how much could you save in the next year, right? And obviously we do this in USD. So Jack, you're going to do some sort of like conversion there. So how much could you save in the next year? Divide. How much could you save in the next year, right? And the second number is how much can your investments return you in the next year? So let's say I'll do some simple numbers. Let's say you could save $500 a month times 12 months. That's $6,000, right? Okay. Let's say that's your first number. Your second number, let's say you had 20 grand invested, you got a 5%. Let's say you think you're gonna get a 5% annual return. That's $1,000. So which one's bigger? The 6,000. What that means is you need to focus more on the bigger number, that thing, saving. So you need to focus more on saving money, getting it invested so you can raise this number. So what Bilal was talking about is his friend is at a point now where this number's come up so much that the daily or the monthly fluctuations, he could not, I'm assuming he or she, whoever, could not save their way out of the fluctuations. So you can, the simplest example is imagine someone with 10 million bucks, right? 10% decline in the market, which is very normal. That's $1 million. So if you just save $1 million in a year, you have to have a very good year. You have to have very high income. Most people can't save $1 million after tax in a year. So you can see as this number gets bigger and bigger, the investment number, you have to put more and more focus on where, on that number. So just compare those 2 numbers. That's all you got to do. Just compare the numbers. And the more one number goes up, the more focus. And I'd say I'm at the point where I have to look at both. And so I think most people, like, middle-aged people and everything, they're going to have to look at both of those numbers, right? Early on, when you're young, just focus your career and slowly transition. And by the time you're retired, and let's say you have less income coming in, you're only looking at your investments because you can't really add to the pile anymore. So I think that's the simple, and that's the framework that kind of lays out the whole book, and where you pick where to read in the book. That's it. It's like, oh, you can either work on investing, jump to these sections. Oh, not work on saving here. So that's the whole idea there. So
love it.
Nick, you do not buy individual stocks, or you say not to do it, or if you do it, it's only for leisure. Have you? What was the last?
Only if you're Elon. Oh, sorry. Sorry. What you said. Sorry
only
about
if you're Elon before you buy.
I was gonna go into that. Yeah. Only for leisure. Yeah. So keep going. When was the last what?
Well, the question was, what was the last individual stock you own, and do you legit only buy index now?
So I do own 2 individual stocks. They are less than 1% of my net worth, and they were at the time when I bought them. So I only do it for fun. I do it with some friends. What is it? You want to know the 2? Okay, I'm not trying to pump my bags. I'm just, for the disclosure, I am not trying to pump my bags.
The podcast is called Not Investment Advice, so we cover
this is not investment advice. So the first one's called Matterport. They do like I don't know if you remember, you guys saw like when people are trying to do like 3D modeling of the space, you used to have these special cameras. Yeah, this one you can just take your iPhone, take pictures, and they have software that basically maps it all out just from like your phone, I guess. So I was like, oh, that's really cool. Got into it, wrote it from 15 to 32. Now it's down to like 8 or something. So it was a crazy ride, right? The other one I got into was very Peter Lynchian. I was like, oh, Rent the Runway. One of my ex-girlfriends use that all the time. Like, oh, this is great. Women love it. Like, they're always like trying to do new clothes. I'm like, this is a genius idea. I got to get in on this. Bought it at 19. It's just gone down since. So I'm down bad in both of these. Remember, they're like 1% of my net worth. Not a big deal, but that's it. Those are the two stocks I own. So even I say, oh yeah, go ahead, do the follow-ups.
Follow-up one. When you were riding that to 8 to 35, how close were you to be like, yo, I'm good at this shit. I am going to start picking stocks.
We all been there. We all been there.
Not at all. No, I got lucky. I was like, I got lucky. This is great. I was like, I'm not selling until it's a 10 bagger though. That's what I said. I said, once it's a 10 bagger, once it's at 150, I'll be like, I'm good. I think I've made my money and I'll take my money and run. But
Fair
until
enough.
then, yeah. So
could you tell, no, the second thing is, I think our listeners will love this story. Could you tell the Peter Lynch story about why you called it a Peter Lynchian trade the renter one way? What was the Peter Lynch story around the pantyhose?
So I don't remember the exact details, but I think his wife had some pantyhose. She liked him. He's like, oh wow, like, you know, these are great. I'm going to buy this because my wife told me about this. It's like basically buy what you know. So if you start hearing about, wow, these are really great things you buy, that's not always true. The financials may not be there. The market can turn against you. All sorts of stuff can happen in stocks, right? And I just bought something that just IPO'd, and you know, I just said I always would buy it no matter what. It came out IPO, but I bought it. That was basically it. And so yeah, the joke, I was like, I should rename the chapter "Don't buy individual stocks unless you're Elon Musk," right? That was going to be the joke, right? Because then you can influence the price. It's a little bit different than, you know, everyone else out there. So,
but not investment advice, not investment advice, not securities advice, any of that.
Not securities advice, definitely not. Do not buy those stocks. So.
All right. Well, okay, Jack, I think there's one very specific question you touched on it, but did you want to fire up, should you and when should you buy a house? I think Jack's a good example here.
Yeah, I mean, I would love to know the answer. It remains to be seen whether my decision was correct or not.
I think the key thing, there's three pieces. The first is like, can you afford it? So obviously, like, that's a big piece of it. And I think what I say is affording is like, can you put down 20%? If you're putting down less than that, I usually think it's risky. And even, I'm not saying you have to put down 20%, but are you able to put down 20%? I think there's a difference, because the people that can put down 20%, right, you know, I'm only going to put down 5 and take the rest in debt, they'll probably be okay. The people that can't put down 20% may not be, right? Because at least you'll probably have cash or assets you could sell off to cover in case something bad were to happen.
Right.
First thing is affordability. Second thing is your personal and financial life relatively stable, right? So do you have like a stable job, right? Do you have decent income coming in, right, to pay for the payments, right? That's also kind of affordability. And the personal stability is like, are you, do you kind of have an idea of what family size you want and all that? And you don't want to like buy a house as a single person and then have to upgrade later, right? That's usually transaction costs will eat you up there. So those are the two big things. So I really think that even though I've been a renter a long time, I'm biased against real estate for a host of reasons. I think most people end up buying, and I think it's not a question of if you buy, it's a question of when, and it's figuring out the right time. So I don't think there's like a wrong, like it's wrong to buy real estate. I think that's silly. I think there's just, is it right for you in the time? And so if you felt it was right to buy your real estate, then it probably was fine. I think that's the key, is like spending time, because it's probably gonna be one of the biggest financial transactions you'll ever have in your life. For most people, it's like, you're putting most Americans have a significant portion of their net worth in their house or apartment or whatever they own. So yeah.
Absolutely. Yep. Good. I think for us, it was a lot to do with like neighborhoods you want to live in. In a lot of cases, nobody rents houses in them. Mm-hmm. Like people live there for, if you want to, we've got a young family and you want to grow up, your kids to grow up around other kids that are families that are like long-term residents, then that's like another contributing factor. I think lifestyle is probably more than 50% of the decision comes down to what you can rent versus what you can buy. Like financially speaking, could you get a better return in different vehicles? Probably, absolutely. But lifestyle wise, that's potentially more than half of the decision as well. So yeah, good thoughts.
Yeah, to touch on there's societal reasons. You just said you'll be excluded from certain communities. You can't, there's certain, like, because people, in America, I think there's probably like people look down on renters. Not saying like everyone in a general way, but like renters aren't even allowed in certain neighborhoods, right? So because of that, you're going to be excluded from certain things. So whether that's certain schools they can't go to or whatnot, there's a lot of things that are, it's beyond just, owning the home and the financial. There's a lot of non-financial things that I try to touch on there.
100%.
Sorry, I was just going to ask. I've just found, because I've run this obviously myself too to decide if I'm buying or not, and generally speaking, like my family is basically in real estate, so I kind of grew up with that and being like, oh, I have to buy a house. And like most of us, that's what you grow up thinking is that's the American dream or the adult dream anyway, of you find a wife or husband, you have kids and you buy a house. And there's nothing wrong with that for most people. But I think what changed for me is, especially when I moved to New York, when you just run the numbers, the buying here is just insane, right? And like there's some of my friends are paying literally twice the amount, their monthly payments for mortgage and taxes and stuff like that, than they would be for renting. And yeah, you could say the upside is they own it and they have the equity and they're going to grow in value over time. But I think that's very different to buying like the way Jack did in Nashville, or buying in most of the country, where like the coast regions or the really expensive, high cost of living cities. Personally, when I've run the numbers, I'm like, oh, this is scaring the hell out of me. So I just stay away from it. And then I think the other factor is, personally, I like really love the renter's bliss here. Like that phrase of like, if the roof messes up or the boiler breaks, like I don't have to deal with any of that stuff. But again, that's a personal lifestyle choice and I can afford to do it. But yeah, I think that's another thing a lot of people don't always think through when it comes to buying anyway.
Yeah, I'm very similar to you, Bilal, in that way. Like the return on hassle, as it's called. I think Mitchell Baldridge had a tweet about this. Yeah, the return on hassle is just not worth. I'm just like, oh, I don't want to deal with the pipe. I don't even know how to do. I'm not a handy person. I can't do any of that stuff. So I mean, I know how to use basic tools, but anything beyond like an IKEA set, like okay, that's it. I stop at IKEA furniture. Anything past that, like count me out. So, but yeah, so I agree with you. I think return on hassle matters.
Just run the numbers. Trung, over to you, mate.
I never heard return on hassle before. My only frame for if I'm buying a house is it's not my decision, my wife's decision, man. Like that's it. She wants it. She wants the house, so I'm gonna have to pony up. Like that's, man. Jack, is there? I know Celia's listening here. I don't want to put you on blast, but was this part of the calculation? I mean, I'm not gonna have a choice. That's all I'm saying, man.
There's a collaboration for sure.
Jack's face.
Wow.
Zoom into the face there, editor, please.
We spent so much time in circumstances that we disliked, and been watching this place for a long time. Right place came out. Just got to do it, mate.
Yeah, fair enough, man. I've shipped my wife and I had a lot of long distance, Asia, United States, Canada. A lot of this stuff is like, I kind of owe it to her. So fair enough. I'm not mad about it. But that's my last thought on the real estate. You guys have any more? I got a couple more from this book, some good points from the book.
That's going to be in Vancouver, right, Trung? We could do a whole segment. That's going to be on the Vancouver real estate market. But
from means to mansion is going to be the next segment for Trung when you buy the house.
Might need Nick to run the numbers on the Vancouver possibility because it looks pretty slim right now.
You just need 300% return for the next 4 years. You should be all right.
And I'm good, right? All right, here we go. So Nick, from your book, I'm just going to keep reminding him, and you guys know, just keep buying. People, just keep buying. That's the name of the book.
I better keep buying that book, more like. Just get over there. Order that right now.
Wait, Nick, are you doing the Audible? Are you doing the Audible? Are you going to read it?
No, I didn't. We hired a professional to do all that.
Bro, you got to read your own book, man.
You should have got Trung to do it, man. That would have been. Can you imagine Trung reading that? Standing desk.
Okay, hold on. Nick, hold on. I agree here with Bilal. 3 things. If you're not going to read it, you need to ask David Goggins to read it. If David Goggins won't read it, I'll read it. So let's run that through, man. Whoever you hired, fire them. But all right, here we go. The one thing, so obviously you'll know this as a writer now. A big thing with writing is having ideas assigned to you, right? Oh, this guy came up with this idea, right? I think this one's going to stick. I'm sure you blogged about it before. The 2X rule. Can you explain what the 2X rule is and how hard are you trying to make this stick? Can we have hats made?
So I came up with this rule, and I've heard other people. I know Jay-Z has said this thing, which I found out about later. I'm trying to trust me. I credit Jay-Z when he gives me ideas. He has given me financial ideas. We're not going to get into all that right now, but the 2X rule, someone said like, oh, if you can't afford it twice, or if you want something nice, you have to be able to afford it twice or something. There's some rhyme there. But basically the idea is if you want to splurge on, I'm trying to get rid of your spending guilt, right? A lot of times people like feel guilty about spending money on themselves. I'm like, we need to get over that. And so here's how you do it. If you're going to spend a lot of money on something, I don't know if every person is different. Some person it might be a nice watch. For another person, it might be a nice dinner, whatever it is. If you're going to spend X dollars, just save another X or 2X of that and take that other X and either invest it in some sort of income producing assets or something that's you think is going to preserve your wealth over time, or donate it. There's different ways you can do this, right? To kind of get rid of your spending guilt. So if you're going to save $300, nope, save 600 and take the other 300 and either invest it or donate it or something like that. I think that's a way to get over spending guilt. So
how long have you been doing it?
I hope it takes off.
How long
I've been doing it for a while now. So I've been doing it for a while, probably like 3 or 4 years now. I think I've been doing it. So almost any time I do something that's not normal, like not my normal spending habits, not like every time I go to a restaurant, because I go to restaurants, that's like my thing. I like going out a lot to eat. But if I do anything like I get a nice watch or I buy a nice pair of shoes, I will save double and then have to invest that. So
that's a good rule.
What was the very first one you did?
I'm trying to think. I think I bought a pair of dress shoes for like $300, like Allen Edmonds or something. And I just put another $300, $400. Can't remember the exact price now, but it's something like that where I put another, because I'm like, because I was getting these cheap dress shoes off Amazon for like $60 and they kept dying every 9 months. I'm like, I might as well spend I had spent like over $400 on these fake ones over like 2-3 years. I'm like, why don't I just get real ones and just have them like, resole them? I'm like, okay, this makes more sense. So I actually invested in my shoes. And so I still have those. So.
Hey, Nick, I just got an idea why you're talking about that.
Yeah.
You need an app. So every time someone buys something, it automatically, you could call it index fun.
Oh my goodness, guys!
This is live. Jack Butcher
he's just
framing
giving out alpha. Jack's just throwing alpha. There's someone else do it. Doesn't want to deal
Fountain
with it.
of memes.
Let me catch some of that. Let me catch some of that alpha. Index fun. Listeners, oh my goodness. Nick, Rich Whole Wealth, you're welcome. All right, you're welcome. There you guys go.
Also, Nick, I want to hear what other business or investing advice you've got from Jay-Z. Apart from I'm not a businessman, I'm a businessman. Are there any others that come to mind?
Great question.
There is an idea. I didn't want to discuss it much today, so we won't get into it too much. But there's a song between Kanye and Jay called N-words in Paris, for lack of a better term. And so in the song, he says, "What's 50 grand to a motherfucker like me? Please remind me." That's what he says. I'm sorry if I cursed. Or do I need to not? Maybe
no. It's NIA, man.
Okay,
this we encourage it.
I have no idea. I'm sorry. I had to give the lyrics. So at the time when he said that, he was worth about $500 million. So that's like 1 basis point of his wealth. And so I was like, oh, that's like a trivial, like, what's it to me? Please remind, it's like, it's trivial. So I said, like, what if we use that to like anyone's wealth, right? And so I think 1 basis point, 0.01% of your wealth is a trivial amount. And you can use that to think about like wealth levels. And right. So eventually I'm going to write more on this. I've only written 1 post on it, but I think I eventually want to kind of write a longer form piece on this. But basically that piece of investment advice, or just that piece of financial advice where he was talking about triviality of money. And I think like, wow, that actually matters, because like the triviality of your spending decisions goes up by like logarithms then, right? It's like someone who has $10,000 like has maybe $1 trivial to them, but someone with 100,000, it's $10. And so that might not seem like a much. $1 to $10 isn't that much, but the amount of wealth you have to get to make that jump is 10x, right? And so to go from $10 to $100 trivial, you have to go from 10 or 100,000 to $1 million. So you have to keep 10xing every time. And so that's why I think wealth levels can kind of be like logarithmic in that, orders of 10 basically. So it's a kind of a fun idea, like a wealth ladder. And so I think I'll probably get into that more in the future.
Well, I got one question, one comment. So the first question is this: the shoes that you did the 2x rule on. So for listeners, the 2x rule is if you're going to splurge on something, you should assign the same dollar value to a charity or investment. All right. So remove the guilt. Those pairs of shoes, did you walk into your first Rich Hole interview with them?
No, I don't think I did. I was wearing a different pair at the time. I don't have. Okay. I was wearing a pair of boots, actually. I was wearing a pair of boots, believe it or not. So, like in a dress, I was like wearing like a dress stuff, but it was like raining, so I had to wear boots. So I think I remember correctly. Yeah, I was wearing like the dress pants and a suit. And I haven't worn a suit since. They're not about that. So
okay, amazing. Well, I've seen Josh Brown, man. He's a cool cat. He ain't wearing that suit, right?
Yeah, all right, so, we ain't wearing suits. So
beautiful. So my comment was N-words in pairs. This is not necessarily related to the wealth thing, but they came to Vancouver in 2011. It's the greatest concert I've ever been to. They played N-words in Paris
6 times. 11 times. Wow. I remember they were doing it at minimum of 6. I was going to say this, we could do a whole episode on Jay-Z's investment advice from his songs. I mean,
we should.
I've got a few in my head, but I'll keep the genius levels are wrapped in my head for now. The Dumbo one, if you guys are thinking that one. And then the other one I used to love was more of a sales thing, but it was like, I sell ice in the winter. I sell fire in hell. I'm a hustler, baby. I sell water to a well. I mean, that's not really investment advice, but that's the vibe, man. Anyway,
that's life advice. That's life advice, bro.
That's life advice, exactly. All right. I think we had a few more to go through on the book, right, Trung?
Yeah, actually, I could jump. This one is more, it's not necessarily, well, actually, this might be, the framing of this was really smart. You called it the time travel question, right? Like if you're a time traveler and you can only assign like you go back in time and the only thing you could do is tell your younger self or an older, you'll tell the story, but you basically give one advice, right? Like you can only say one thing or one theme. Is that the premise? Because I love this thought experiment.
Yeah, you imagine you have to like give yourself a set of financial instructions to follow at some point in the past, and the world isn't like perfectly deterministic. So like, let's say you go back to 1976, that doesn't mean Apple's going to make it out of the garage. You go back to 1929, maybe the Great Depression doesn't happen. So you can't like market time perfectly, right? But let's just say the world behaves similarly. It's just the events may not go exactly as you planned. So like if you given that information, what set of instructions would you give to yourself to maximize the probability of you just like reaching your financial goals? Not trying to be a billionaire, not trying to be just like, you want to reach your financial goals, have a decent financial life. What would you do? And I said, like the book for me, these are the instructions. Like I know nothing about you, right? I have no priors about you. I'm handing instructions to you. And like, this is it. If I had to say like what works across most periods, most of history, diversify income producing assets, etc., that's it for most people most of the time. There's always going to be exceptions, but that's my takeaway there.
That's like the version, John Rawls' veils of ignorance is like, you have to set up the rules for the world as if you had to exist by them. So like, how would you want a world constructed if you didn't know how you were placed, right? If you're born in sub-Saharan Africa, you're born in poor parts of Southeast Asia. This is kind of like this, right? These are the general principles that are very applicable across all time. Would you say all times though? Are we sure this is across all time?
Well, within the last, within modern era, right? Obviously before investment, back in the 1500s, we didn't have investment markets. You couldn't do that. So this is within modern era when we had public markets, when assuming everyone could participate. Obviously there's racism for most of history, like women couldn't participate. So there's a lot of things that are conditional. That's not true. But I'm saying today, like no one is being not allowed to buy, once you're 18, once you're an adult, any adult can buy public equities or buy investments, right? And so I think no one is taken out of that. That's also why I push stocks, because there's discrimination in, if you're selling a house, Trung, and I'm like, I don't like people from Canada, I can just, discriminate against you, right? Or something. I mean, we obviously wouldn't be doing this US, Canada, but you get my point, right? People can discriminate against people, but when you're selling an index fund or buying an index fund, I don't know who I'm buying from or selling from. There's no way I can discriminate. So for me, I think that's why I like index funds a lot, because any sort of like individual characteristics which have been used for discrimination across history can't be used against people. And I think that's why like you're not going to take a cut, like building wealth doing that. So that's why I support index funds and public
securities.
Isn't
technically crypto the ultimate censorship resistant though? Like what are your thoughts on that?
I mean, it's also similar in that way. I mean, it's also similar. I mean, I guess a custodian could be like, oh, we're not going to give you an account here because of this or that. That's possible. I agree with that. So crypto is like that way where you could kind of get around that as well. So it's even more, I guess, egalitarian in who can purchase.
All right. So I'll share with my guys, if you guys want to share the one tip you did. So I would take a piece of paper back to 1985 when I was born. I go into the Calgary Foothills Hospital where my mom's giving birth to me. I would just hand my young self a piece of paper, and on it is one word: "Cum rocket."
Oh, Jesus Christ. I wasn't ready for that one. That was a throwback. Damn, Trung.
Oh my God.
Didn't see that one coming.
That's my time.
For new listeners, that's an old school.
That is a terrible idea. Reference. That is the worst. Your mother's going to get that piece of paper and say, what type of, I just gave birth. This is the most, she's going to crumple it. If you put Dogecoin, she might have kept it. But you had to go and use something with loot. She's going to say, this is disgusting. And she'll never think of it again. And that'll be the end of it. So.
Well, that future billionaire gone. Mom, what are you doing? Come on. That asset was just sitting there. All you had to do was wait 37 years and he could have been a billionaire.
All right, sorry, Nick. Guys. So you've talked about not buying individual stocks and some of the other stuff about not buying a dip, and you've kind of touched on in the book. You've got a whole chapter on what you should invest in. We've just talked about index funds. Could you go into a little bit more specifics around that, like your approach to that or your advice given all the research you've done?
Yeah, so I can't give specific tickers for compliance reasons, so I try not to do. I shouldn't even brought the individual stocks. Obviously, I'm not, remember, this is not investment advice, but I will say, like, I just diversify. I obviously own a broad basket of US stocks. I own the developed markets. I own emerging markets. I own REITs, which are just real estate investment trusts. So you're basically owning real estate without owning physical real estate. You just own it through a company, which manages a lot of commercial and residential properties, things like that. And so there's a lot more stuff out there, right? You can be like, oh, I want to get into royalties. I want to get into farmland. I want to own small businesses. You start getting into private deals, things like that. There's a lot of things you can buy. Those ones are just the easiest because anyone with a brokerage account can do it. So it's the easiest, lowest hassle way to kind of get into investing is owning a lot of these. And I really push for diversification because, yes, the US has beaten international markets from 2010 onward, but look at the decade before that, 2000, 2009, US underperformed emerging markets, right? US underperformed developed markets. So it's one of those things where, you have no idea what the future holds. And I'm not saying that the US isn't going to be on top again. I have no clue, but I'd rather, take a little bit of a hedge. And, they say concentrate to get rich, diversify to stay rich. That's a very common phrase. But my counter to that is, well, how rich do you need to be? If you're trying to become a billionaire, yes, there's no way just keep buying is going to make you a billionaire unless your income is unless like you're The Rock and you're making, a couple $100 million a year. It's not going to happen, right? Just no offense. It's not going to happen. But I'm saying for most people, how rich do you need to be? Really? I think most people can live a decent financial life without having to do that. And I think you can do that through diversification because diversification is going to give you the peace of mind to keep going, right? Versus like having everything in, imagine you had most of your money, let's say you're Russian and you have most of your money in Russian stocks and they go down 80% in 2 weeks. You'd panic. You would absolutely, outside of what's going on in your personal life, that would just destroy you. So diversification matters. The Russian investors that had some crypto assets or had some international assets somewhere, they're going to be much better off than the people who had most their money in Russian stocks, right? So
got it. And just in terms of like the asset allocation between them, again, you can't give specifics, but is there any guidance on like how people should think about that at least, or different approaches that people take to that?
Yeah, I say find some level of risk you want to take. So like I used to be like 15% bonds and I think I'm like 10% now, but it's like, it doesn't matter that much. I don't think the specifics matter as much as, of course, asset allocation matters. Don't get me wrong. But I think if we're looking at like these specific little tiny tweaks, that's probably not going to matter. I don't think it's gonna be like, oh, I could have made it to my perfect life, but because I had 15% bonds at a 10%, I didn't make it. Like, I don't think that's it. You're either going to be much past the finish line or you're not going to be close at all. I think it's like one of those things, like, the guys that work out at the gym, like, oh, I got hit my max. Like, when are you going to use exactly like max 275? Like either a train's going to fall on you, you're not going to be able to lift it, and you're going to be dead, or you're going to be like lifting like something very light. Like when you exactly need that exact amount of strength, it's never going to happen, right? It's either you're way past it or you're way under it, right? And that's how I think about financial stuff too. So in the book, but that's just kind of my take on it. Yeah. So. And then
I just had one last question on that. Is you mentioned earlier about income producing assets, and in stocks, there's obviously dividend stocks, right? And if you buy a business, there's income that comes from that. I'm again coming back to that crypto part because obviously a lot of people listen to this are interested in that, and that is we only talked a little bit about Bitcoin earlier. Obviously now with Ethereum, the number 2 crypto asset, there's an argument to be made that is an income producing asset if you're staking it. Like actually natively staking it, you can basically earn about 5 to 6% right now. That might fluctuate in the next year given the ETH2 merge. I'm curious now, like from your point of view, seeing that as something to invest in that could actually generate legitimate income, would that change potentially? What would it take to change your mind around like, oh, I'm only going to put 2 to 5% to actually now this is a lot more attractive. I'm going to go up to 10, 20 or something like that. Because even hearing people like Kevin O'Leary, the Shark Tank dude, who's like, he's old school in many ways. He was very anti-crypto. And when he saw he could actually stake Ethereum, that is one of the big things that kind of pushed him over the edge. And now you can actually value that based on income the way you do other assets. So curious if you've got any thoughts on that.
Yeah, so I didn't discuss staking in the book as much. I think it's a more complex topic, but my thinking on this is like everyone that was talking about staking's great, all that. Back last year in late 2021, staking was great, right? And imagine you started staking at the end of 2021, right? You're going to stake for a few months, let's say, right? You're staking an asset, right? You're like, oh, look, let's say I'm not going to use Ethereum, which is 5%. Let's say you're getting 10, 20% return on this asset, right? You're staking it, but then the asset declines by 50% in value over the course of the next few months. It's like, okay, I got 20% annualized, but I lost, like the underlying declines a lot, right? Versus like your cash, like the underlying, yes, it's going to decline by inflation, which can still be a decent amount in certain years, but you're not going to have that volatility. So I just don't understand it as well. So I don't understand the risks there. And I think the risks are you stake this thing and then the underlying falls enough. So you're like, yes, you're getting some income, but what you get back is worth less than what you put in, right? And so I think with staking, so my whole thing about income producing assets, I'm not saying you have to put 2-5%. My whole thing is like try to have 85 to 90% of your net worth in income producing assets, because at some point there's a fundamental weight there to income, right? Like imagine a suitcase with $50,000 in it, right? Or $100,000 in it. And someone telling you, oh, I think it's only worth, 150 or 200. No matter what the price is, that's going to move around. We know there's $100,000 in that suitcase. That's fundamental. That's earnings. That's weight. There's something there. Now, obviously, with other things like art, with gold, with obviously crypto as well, I'm not sure if the value there is as tangible. And I'm not saying, of course, I'm not an expert on crypto, so I'm going to be, but I own some because I don't know, right? I don't know. It's good. And I see there's value in the Ethereum ecosystem, like people building stuff on that, or all the layer 2s and stuff on top of that. Like I understand all that. There's definitely value there. So I think what we're thinking of as value is a little different because it's a new asset where we're in a completely new world. So I'm going to be honest and say, I'm not an expert here. And so because of that, I say like, hey, don't put 50, 100% of your net worth in this if you don't know. And so if you're someone who is an expert in this, that's fine. And you want to take those risks, that's fine. But like the prices fluctuate a lot. I think that's the scary part. I just don't know until you've seen your wealth. If you've seen your wealth decline by 50% multiple times in crypto and you're fine with that, then you're probably okay to stomach that. But some people couldn't, and they may sell out or do something crazy. And so imagine all the people that bought Bitcoin at 69,000 and sold at 30. Those are the people I'm trying to prevent from doing those types of things. Yeah. So
no, I think that's a completely fair point of view, man. And I think that's smart for most people. And the only thing I would say, and again, we don't have to go into this too much, is there are now things like stable coins, obviously, where they are tied to the US dollar. And there's basically two different types. There's collateralized ones where they're backed by dollars like USDC and apparently Tether, but we all know that's probably not the case. And then there's things like algorithmic stable coins, like Terra is the one that has really popped off in the last year anyway. And that one actually allows you to keep your asset, the underlying amount, the same because it's a stable coin, and still earn in this early adopter stage because it's incentivized 19-20% on that. But again, there's obviously risk with all these things, right? Like it could lose its peg, the whole thing could go to shit. So that's definitely not investment advice. But even for me, it's been quite interesting for me as being someone who's like very risk averse to having some of those things drop dramatically, to being like open to, oh, this is actually an interesting new application of it. So that might be something you might like checking out at some point as well.
Yeah, I think I'm definitely getting more interested in crypto, especially as I met people and seeing the amount of smart people in the space. I would trust me. I was a very skeptical person on the space initially. I thought it was obviously mostly speculation. As I met more people, like there's a lot of market stuff and market innovations out there. Like you start listening to these people and what they're doing in markets and how they're getting liquidity and pools, and you start getting into it's like very complex. Completely. I don't fully understand all of it, to be honest with you, but like I think there's more value here than what I initially believed. And so I'm going to admit I'm a little ignorant on some of these issues, but I'm open to learning more and kind of learning about this stuff. And yeah, with the USDC or something that's backed by dollars and like, you have a company that's basically backing that, like, yeah, whatever yield that is, that's like an income producing asset. It's more like a bond, but it is an income producing asset of sorts. So I wouldn't say like all crypto is the same. It obviously varies in what exactly we're talking about. But in that case, then yeah, you could have a significant, stable coin allocation instead of having, let's say, US bonds. Now, obviously, I think US bonds are probably safer than a stable coin for a host of reasons because the government can just print the money. But we can debate that. Those can be debated. Those ideas can be debated.
Bilal versus Nick coming up, boys. 3-hour extravaganza.
No, that was good. No, thanks for sharing that, Nick. Trung, I know you had something else there, mate.
Yeah, actually, I had one more point that I wanted to bring up. It wasn't related to the book. So before I get into this point, because I do have to boogie after bringing up to pick up my kid, is so listeners, viewers, just keep buying. Amazon, Audible soon, but not his voice. So that's a little bit disappointing.
Guest read by Trung Phan.
What I will say is amazing. The chapters are done so well. I mean, you pointed out in the introduction, but like you don't have to. This is one of those things where you got to sit front to back. The first half is about savings. Second half is about investing. So wherever you are on that path, you pick these chapter titles. They're man, as a writer, me, like I call myself a writer, man, these clickbait chapters, man, they're done really well. Not in a bad way, but like it's like, why should you invest? I'm like, that sounds like an interesting chapter. Let me read that. And then like chapter 20, why you will never feel rich. I'm like, oh, that feels like me too. So I mean, we're very well organized, man. I'm sure you put a lot of thought into it.
Thank you guys. So
my last, not necessarily a question, but it was more around, of all your blogs that I've read, and the one that has resonated with me the most is your one about drinking. Because I had, so Nick has a piece about how he had a dependency on alcohol. And I had a very similar one where basically till I was 25 or 26, it's like I couldn't have fun. I couldn't go out socially without getting absolutely blackout. And like I was blacking out from university, probably 15 to 25, blacking out 1 or 2 times a week, like legit blackouts. And dude, that resonated, man. Is like, how did you get over that? And like, how are you managing now with alcohol?
I think it's always a struggle. I mean, I originally wrote a post on drinking called Just One More. And it was about, I'm like out with friends and I said, 85% of my drinking experiences were positive. I enjoyed them. I didn't always black out and that was great. I was like, I had a good time. I didn't necessarily get a hangover, but it was those 15% of times where I okay, I can have one more. I had 2 here. I can have another here. It's like, it's that marginal decision doesn't feel that bad, but when you do it over the course of 6 hours, that marginal decision adds up. And the next, you're like drunk and you're calling people and just, had conversation with my friend, 15 minutes, don't remember it happening, like random stuff, wake up. Yeah, no, I don't text much, thankfully. I usually just call. Like I'm somehow like I don't get on Twitter. I'm like, once I get like blackout, because I know like I'm gonna cancel myself or some stuff. Like get away from my phone. So I'll call people. So I'll be like talking to people like this isn't traceable, screw, whatever, hang up the phone. But that's kind of how I think about it. It's just like it's always a struggle for me. And I'm guessing you probably had similar things. And so I've just had to try and implement systems to kind of get over that. And so for me now, that's like, I don't drink Sunday to Thursday. I just really don't do it, so that helps me a lot. So Friday, I can still go out Friday, Saturday and kind of get that out of my system and enjoy and be social. But at the same time, I can, reduce my total alcohol consumption. So
the last thing I add on that is I didn't drink caffeine until I was 28, which is insane. And now I just drink it religiously. If I just swapped out caffeine for alcohol in university, I'd be like a Rhodes Scholar or probably billionaire right now. Maybe not, but I threw away like a good 35 years of my life because of alcohol. So all I'd say is like to Nick's blog and writing around it is like, it's important to have systems, understand your relationship to alcohol because that's the first step, right? I mean, obviously people are way further in worse situations, but yeah, man, that one really resonated with me.
I appreciate that. Thank you.
How about Bilal and Jackie? Any thoughts? I know you guys were partying back in the day. We never got into
two Brits here, man. So no, I think it's cool, man. I think it's cool that you've created like the guardrails, and I think as you get older, especially, I think it's different when you're 21 or 20 at college. Like you can handle just a lot more, like beyond just drinking, just in general. Like even socializing, like I'm an extrovert. I used to socialize every day of the week, like happily, completely fine. And now I'm like, I still like to do that a lot, but I need to like create guardrails to be like, I need to conserve my energy. I need to focus on the things that are most important. Obviously still have fun and do the things you want to do. But I think that's something as you get to in your 30s and you wake up, like I just woke up and I'm like, why have I got this pain in my side? What's going on here? It's 3 days. Well, I had to stretch it out. I was doing yoga before this, so it's like that's the sort of stuff that definitely compounds. And I think the way you said it there, like just one more, is not just with drinking. It's like especially with drinking, it could be with a lot of other vices we all have. And so I think that's cool, man. I think it's good just to have a plan around how you're gonna manage it anyway.
The hangovers are so bad in your 30s. It's unbelievable. It's unbelievable.
Yeah, see you at Joe's Pizza at 4 a.m. there, Nick, right down where you live. So
exactly.
I know, actually, Jack, you, he's got a nice little...
He sells some Lego, boys.
Yeah.
Stay out of the pub.
Yeah. Well, Jack, but I know you, if you don't mind talking about it, I know you had stopped drinking for a while at one point, right? And I don't know if... like it sounded like you just wanted to give it a break or something, but that was something you were consciously trying to...
Yeah, I mean, most of it was like... trying to put extra work in the gym or like spending so much conscious effort on nutrition and then like going and drinking 10 pints. So
reversing it.
what
Yeah.
are you doing?
10 pints.
You know what I mean? Like moderation would have been a better strategy. Then I have like kind of an extreme personality in that respect.
Yeah, same.
So, you know, I would like, if I'm going to do the thing, I want to just do it. Like the moderation component, I've definitely gotten better with it. And there are natural forces that come into play, like having a 1-year-old and having to get up at 7 o'clock in the morning. Like there are responsibilities that you must meet later in life. I think like for me, definitely over the last couple of years, pandemic stuff, like when I was consulting on the road, doing the corporate thing, it's like people cracking beers at 2 o'clock on a Monday afternoon because you like finished a PowerPoint presentation. It's like,
celebration time.
We just need to scale. We need to scale back on what merits a celebration here. And,
definitely, yeah.
That I think just time is I never had a significant problem with it, but I could definitely get carried away, and I'm scaling back. You know, I'm also, you know, I found out I'm actually allergic to beer.
Oh my God.
That's an Asian thing, man. That's an Asian thing. We don't have the.
It's like some digestive thing where I can drink it, but I don't sleep. I don't like if I drink like 2 beers and I just get a shitty night's sleep. I recently got the Aura ring to track sleep. And,
terrifies you every morning after drinking. Yeah,
exactly. And I recently made the switch to tequila. I'm having a much better experience with the tequila than I was on beer. So find out what works for you. And then I think a lot of it is like moderation. Like, do you like what are you prepared to give up for the evening that you're having? Like, is it a situation where you'd be happy to like sacrifice a full day of work and family time, and more often than not the case? But like full elimination didn't work for me, and don't think I'll go back there. But you know, we'll see.
Dude, thanks for sharing.
Definitely what's happening in the Euros, man. I mean, we talked about it on this podcast. You, I don't know, Nick, if you saw this, the way the English were behaving during the Euro football. I mean, like
I've been to Amsterdam once when there's a bunch of English people, so I've seen people throw bikes into the river, and I've seen things. So.
Yeah, not the best, not the best
representation.
Best behavior. Yeah. Anyway, thanks for sharing that, Nick, and guys. I think Trunk, you're gonna have to run in a second as well, and we're at time.
Perfect,
so
man.
This was amazing, Nick.
This is
really
great.
appreciate.
Thank you guys for having me on. Appreciate that.
Appreciate you taking time, man.
Thanks for coming.
Of course, man. I look forward to it. So yeah, just let me know when you guys want to post, whatever. I'll help promote, obviously, as normal, and just kind of keep me updated.
Anyway, thanks for listening again, and thanks for being there, Nick. We appreciate you. NA fam, go support and buy a copy, buy a gift for your friends, and let us know what you think of the book. And we'll see you next week for the next one. Cheers, everyone.